So folks, welcome again to the 49 North virtual meeting platform. And thanks again for everyone on your participation. But we are very excited to be featuring today an old friend in the business that is running a new group called Fortitude Gold, and with properties in Nevada. And the CEO, the old friend, is Jason Reed. And Jason Reed was from Gold Resources Corp, and a great company, domestic company, and loved working with him in the past and now working with him in the future. Again, just quick housekeeping items on Q&A, and there should be Q&A with this company, with this CEO, because he's one of the best in the business. You have two options at the bottom of your screen. One is the raise your hand, voice audio direct. The other option or feature is the type in feature, which we highly recommend during the presentation in this format, and then potentially at the conclusion. So with that, I want to throw over to the great Jason Reed and his story on Fortitude and their properties in Nevada. I think it's a very, very, very compelling story, and it's a very good group. And I like this group a lot. And so I hope you guys enjoy it. And with that, I'll give it to the great Jason Reed.
Thank you, Matt, and good afternoon, everyone. Thank you for taking the time to learn about Fortitude Gold Corporation. Let me see if I can, there we go. I will be making forward-looking statements, and I encourage you to become familiar with this safe harbor and the risk factors in our 10K. So Fortitude Gold is located in Nevada, USA, arguably one of the premier mining jurisdictions in the world. We have extensive, successful mining industry experience on our management team. We're operating a low-cost, high-grade open pit heap leach operation. Our average grade in our deposit is 3.88 grams per ton. You'll see throughout the presentation, I talk about grade a lot. And if you're not familiar with grade, it's not uncommon for mines in Nevada to mine and chase 0.5 grams. So to have anything north of a gram is very good. And you can see that we have 3.88 in our last proven and probable. We're a unique gold equity and one of the few that pay a dividend. We not only pay one, but we focus on dividends. And we're positioned to distribute substantial dividends. And you'll see the impact of that through the presentation. Now, our strategy targets projects with low operating costs, strong returns on capital, and high margins. We want to grow organically, remain debt-free, and distribute substantial future dividends. Now, we have leverage in our story that we have an ultra-tight capital structure from which to distribute outsized future dividends. Why are we doing this as a gold company? We're doing this because obviously as a gold company, you get a market premium, or you get it rated in the market based on being a gold equity. Well, we're also focused and targeting a pool of capital much larger than the gold space itself. And that pool of capital chases dividends and yield. And so we, through substantial future dividends, seek to transcend from being solely a gold equity and get the market premium yield valuation. Now, as Matt referenced in his opening statements, that I used to be with Gold Resource Corporation. I was the CEO with them. I was with Gold Resource for about 15 years. But participants in Fortitude Gold, management in Fortitude Gold, have previous mining company success, which includes a decade of gold production, 10 consecutive years of profitability. We generated over $1 billion in revenue, and we distributed over 115. It was actually 116 million in dividends to shareholders by the time I left there. We built 2 mining units and 4 mines. And so with Gold Resource, when I was with them, we had a tremendous success to the last bull market. We IPO'd at $1 and we ran to $30 a share at a high. We did that not based on solely the ounces we produced, but we did that because we were able to attract the pool of capital that was chasing dividends and yields. And we would field calls from shareholders that say, hey, I'm a new shareholder. I love your 72 cents a dividend. That's what we were paying at that time with Gold Resource. What do you guys do? So obviously the light bulb goes off in your head and you're saying, wait a minute, as a gold company, we can tap into this pool of capital very few other gold companies can do. Well, we had great success at Gold Resource, operating for, again, 15 years with them. And Bill Conrad, our chairman, and myself moved over from Gold Resource to Fortitude Gold. And so Bill is now the chairman of Fortitude Gold, and I'm the CEO. So we hope to duplicate what we did at Gold Resource. I'm not saying we can get Fortitude Gold to those lofty $30 high like we did with Gold Resource, but I believe we will be substantially higher than the $7 range we are today. So we basically walked the path in the past, and we're applying that knowledge to Fortitude Gold going forward. So our producing asset is called the Isabella Pro Mine. This is a great location to have a mine. We've produced first gold in April of 2019. We ramped up in 2020, and we're now targeting this year 40,000 ounces of gold. And we have many milestones. In 2018, we got our permits, which allowed us to start building the Nevada mining unit. And I'm very proud in 2019, from the point in which we broke ground, 10 months later, we reported our first gold. Now we've been ramping up in 2020, and in 2021, we reached some new milestones, recently announcing and initiating our first dividend, and we also increased our dividend. I'll touch on both of those later in the presentation, but our next milestone is reaching our 40,000 ounce gold target. Now our Isabella Pro Mine is made up of 2 zones of mineralization, if you will, that are within the entire deposit. The Isabella outcrops at 1 gram. And so that's what we started out initially mining and generating revenue. But what we're after is the high grade deep in the Pearl, which averages 3 grams in a high grade core of 5. So we started out with a starter pit to get down to this high grade zone, and we've reached that. Now we're doing the pit layback to get more into this high grade, and that's where we are today. And as I said earlier, many mines in Nevada chase and put into production mines that average 0.5 grams. Look at my 1.28 million tons at 3.88 grams. I would argue my 1.8 million to 1.28 million tons is worth a mountain of 0.5. What other mines have to do is make up for it in moving tons. In our situation, as the years go on, we actually have to push less tons, move less tons. For instance, we're going from 8 million tons this year to about 2.5 next year to about 1.5 the following year, all while keeping a 40,000 ounce run rate. So I expect our costs to potentially drop even farther. And you can see here, early days, we targeted a $650 average cost per ounce. As we started out, we were about $1,200. We dropped it to $9, and I just came out with our first quarter this year, and we were $575. So we're doing great on cost. We're a low-cost producer. Now, what differentiates us from most all other mining equities is we're focused on a dividend, and this is our dividend potential. We currently pay 36 cents annually, so we pay right now a very substantial dividend. We initiated our first dividend at 2 cents a month in April, and in May increased it to 3. Now, as I mentioned in one of my first slides, we have leverage. The leverage is the fact that we have just 24 million shares outstanding. Now, those who aren't familiar with the space, most explorer companies who are just in exploration can have hundreds and hundreds of millions of shares outstanding. Most producers have 500 million to 1 billion shares outstanding. We're a producer with just 24 million shares outstanding. And so the impact of that is we can leverage our good margin and pay a substantial dividend. And you can see what our likely possible and aggressive targets at this point in time are. Our policy is to return as much cash back to the shareholders as soon as possible while balancing the needs, the capital needs of the operation, reinvesting capital back into the business for organic growth, and paying taxes. We have a great project pipeline. Isabella Pro's in production. We're delineating Golden Mile and Mine of Gold, and we're exploring East Camp and County Line. We picked up all these properties in the depths of the last bear market when no one else was looking. So we believe we have the pole position, the lion's share of the great properties in this particular section of the Walker Lane mineral belt. I can tell you now it's very competitive with gold taking off, and it's a whole different environment, but I believe we've secured the best property around. So obviously as a producer, you also explore. So our exploration mission is to expand known deposits, delineate known mineralized zones, and discover new deposits for longevity of operations. We have 5 high-grade exploration properties, and I'll walk you through each one of them, but we own them 100%. They're all within a close proximity to one another, and that's important for a synergistic approach that we're taking. And they're all in the Walker Lane mineral belt, which is a historic and current mining trend. It's important, and you're going to see this in the next couple slides, that you understand that we have surface and near surface gold on all of our properties, and not too many properties have that. So that increases our chances of finding additional open pit heap leaches. All our properties have high grade. Now, we target deposits that are north of 1 gram. Again, many go in production at 0.5, but all our properties have potential if we can define enough ore on each of them to reach the threshold to make a production decision. All of them have that potential to be well north of 1 gram. Isabella Pro in 2019 is proven improbable. When we first started, had over a 3 gram average. Golden Mile, there's drilling on Golden Mile, 36 meters of 10 grams, just 15 meters from surface. East Camp, 22 meters of 13 grams from 4 meters downhole. Again, very shallow, which is good. Mine of Gold, 15 meters of 3 grams gold from surface, and County Line, 9 meters of 3. Notice that they're all within a 30-mile radius. And this is very important because there's a lot of equipment sharing synergies we can have. And I'll touch on some additional leverage in that regard later. Looking at our Isabella Pro trend, you can see the Isabella Pro mine in the picture in the top of this slide. In the upper right, you can actually see the reclaimed Santa Fe open pit. They did 300,000 ounces over there. And you can see 3 other mines along this trend. So this is a defined historic trend. Isabella Pro, our mine, is the next mine in production on this trend. And we have locked up 10 kilometers of this trend in the northwest. So just at Isabella Pro, I expect to be here a very long time, and I hope to find many additional deposits. Now, I've highlighted some of our targets in the dotted red circles. These all won't be deposits, but I believe some of them will be. So this is where we look to our longevity of operations, is finding more of these along trend and putting them into production. Right next to the Isabella Pro is a Scarlet target. And I just came out a week or so ago with a press release regarding some of the drilling at Scarlet and how we're now delineating that mineralization, moving that project forward to try to reach a production threshold. Whether it's Scarlet or other properties along this trend, I believe we'll be here a very long time finding additional deposits on this trend. We have many other properties as well, like Golden Mile. This is also in the resource delineation phase, and it too had some great drill results press released several weeks ago. This is a district-sized land position like our Isabella Pearl trend, but this one is 9,000 acres. It has high-grade gold drill intercepts. There's 2 known areas of mineralization, multiple open pit potential, and we're targeting a maiden resource in 2021. We've also done some initial bottle roll tests to show us that this can be extracted through cyanide, and we're now taking it a step further, doing column leach tests to make sure it can be heap leached. Now, the Golden Mile has tremendous grade on it. And so again, with the perspective that many mines chase 0.5 grams, look at the drill intercepts at Golden Mile and notice their shallow depth or sometimes at surface. Now, we're already delineating this, as I mentioned, and we've already started designing initial open pits. A phase 1 pit and a phase 2 pit. In the picture on the bottom right or left, you can see the red, some of the highest grade known to date is at surface. So this is a unique situation where it could potentially become an economic deposit much sooner because we don't have a lot of overburden to remove. But we need to go in and drill many infill areas that don't have any drilling to see if, how big we can make this deposit and see if we can reach that threshold to make a production decision. So both a Scarlet on the Isabella Pro Trend and a Golden Mile are in that delineation phase. Moving to East Camp, this also is a district-sized land position, high-grade open pit potential. But what's really unique about East Camp is it has this lithocap associated with high-grade gold and silver. If you're unfamiliar with what that means, what that can do, this lithocap is a silica mantle or flat-lying body, and you can see it above this geologist in the picture. And the thought here, the geologic model, is that we can take surface samples all around this huge lithocap and find gold, high-grade gold. So there is a feeder system somewhere around here. And the model is, did these veins come up and feed up under this lithocap? And if so, that lithocap won't let it surface and it could potentially pool the gold underneath. These can be quite large deposits throughout the world with a lithocap. And the fact we have high-grade gold around this lithocap increases our chances of possibly having one of these. So we're swinging for the fences. This could be home run potential for us. This is a huge area. It'll take us a long time to explore it all, but we have already drilled our first drill program. We're the first to actually drill this lithocap, and we're just now getting some drill results back. And as I mentioned on the recent conference call, we look forward to sharing some of those. But there's additional potential to the north of this property with high-grade veins that another company prior to us drilled. And we believe we'll swing for the fences here. If we swing and miss, we'll go to the north and hopefully delineate enough in these high-grade veins that I'm showing you here to define a deposit and make a production decision and move it forward. Again, look at the grade and look how shallow in depth that it is in these particular veins. You can see a picture in the middle here of the lithocap. It's a very large lithocap, big area. It'll take us a long time to explore it, but it also means big potential for a potentially large deposit.
Hey, Jason, real quick on that annotation, what was the company?
The company was Gold Standard Ventures, and they had this property prior to us.
Okay.
And they dropped the property having nothing to do with the property itself. But if memory serves from what I've read, they were trying to move their railroad project forward and they needed to get additional funding. And the funder said, we'll give you the funding, but you have to divest in all your other properties.
Got it.
And so they dropped this. And so again, it was not a slight on the project.
No, not at all. But it's just, you want to be, it's interesting to me just, to figure out what the project was and who it was. And that's all.
No, it's a great question. And it's important. It actually is worth going off a little bit to explain some of that. On average, before a deposit is found, it can have 4 or 5 mining companies on a property.
Yeah.
So you should never be, and we are never discouraged by having many other mining companies on a property. In fact, I prefer that because they have put their money to work, and oftentimes you get a hold of that data, which saves you time and money.
Yeah, of course.
Which has happened here. But every mining company is different, and it's how they define a mine. You would think it's a cookie cutter, one-stop shop. It's not. It couldn't be any more different than that. Every mining company looks at a property with different eyes, with different criteria and different definition of what they say a mine is. So a big mining company might come in, and we've seen this at other properties in the past and other mines I worked at, for instance, in Mexico, where a big mining company came into an area and their drill hole spacing was so wide, they were looking for a massive deposit. They put their drill hole right through some good grade, but because their next drill hole was so far away, they wrote it off. I come in and look at that, and to me, that's a mine, and I went and put it into production. We ended up getting lucky as far as exploration being there longer, and we ended up finding the Arista deposit, which turned out to be the company maker for Gold Resource.
Yeah.
So the point being is that is a good thing in my eyes to have other companies on
it's substantiation. I mean, at the end of the day, right?
Sure. Yeah, but it's an interesting aspect of this industry where, if you don't know the industry, you think, oh, somebody was on it and left. There again, 4 to 5 mining companies on a property before a deposit's found.
Yeah.
Good question. Good point.
Okay.
So moving on to Mina Gold, this is another one of our properties. We've drilled 15 meters of 3 grams gold from surface. We have some patented ground here, which could really help move something forward quicker with the permitting. We tried to keep it all on the patented ground, but the mineral is moving off of the patented ground. So now we're going to need to go back and drill to see how big it gets off of the patented ground. Again, we're kind of delineating this property too, but it's had some work done from other companies. For instance, they did metallurgical test work. That's that 70 to 80% you're seeing right there with agglomeration. So again, it's good to have other mining companies on properties. I think we can run circles around the big guys because we're one of the rare smaller companies that can put a couple 100,000 ounces in production. Most big mining companies will walk away if there's not 500,000 or 1 million or 2 million ounces. For me, that's great. So I can run circles around them in that regard because I operate in just a different realm. So my last property here is County Line. In the middle picture, the picture on the right, the mountain you see in the background, just over that mountain and to the right is Paradise Peak. That's a 1 million ounce past producer. So this is in a very good neighborhood. On County Line, there's been some small open pits where they mined historically, but we think there's a lot of potential here as well to find deposits and put them in production. Note that it's only 14 miles on paved roads to our Isabella Pearl project. So a synergistic approach where we could even potentially, if we found enough of a certain grade here, we could truck the ore down to our Isabella Pearl and not have to build anything at County Line. So this synergistic approach I keep talking about is there for a reason. We did a similar thing in Mexico where we had a strategically located mill and we brought ore from other properties. In this case, this isn't an underground milling situation. These are all open pit heap leachable. So it's a different beast, but we're taking the same approach of a synergistic approach where we hope to move equipment from one property to the next, to the next, to the next. But when we build projects, as long as each of these properties, we can find deposits that are open pit heap leachable, I'm going to build a process that takes the gold to a carbon phase only. And then we truck the carbon to our Isabella Pearl's ADR plant, which is the final doré production. Why would we want to do that? It's because it's potential to substantially shorten the permit timing and construction timeframes while decreasing project capital expenditures. So if I don't have to build the ADR at each one of these, that saves me a tremendous amount of time with the regulators because that's what they look at as the hot side, they call it, with the ADR. And that's what takes the longest to get your permit. I don't have to deal with the permitting side of it because I already have a permitted operating ADR. I don't have to construct and I don't have to have the capital for that. So it's just a different approach, a synergistic approach that has worked for us in the past. We want to do it here again. It's equipment sharing with infrastructure, manpower efficiencies, and I think it'll do well here. Now, our revenue source is a gold dominant source. It's basically all gold. There's a lot of silver in this deposit, but it doesn't come out metallurgically. So we only produce about 1%. And so we use that as a credit against our costs. But this is just a complete gold focused revenue. Now, I have bios in the appendix and you can, I don't go into this here unless you ask me in the Q&A. You can look at our bios. But the most important thing is this team has decades of experience in the mining industry, successful experience, not just being around, but again, successful experience. And these individuals that are called out here, John, Barry, and Greg, I worked with a gold resource. So they found their way over in the transition in the spinoff of Fortitude Gold. And I'm very pleased to be working with them. This is a great team. We were successful there. I think we're going to be successful here. The board currently consists right now of Bill Conrad and myself. Again, I referenced earlier how we were the two remaining guys from Gold Resource early on that walked this path. And so we're the logical guys to walk the path going forward with Fortitude. And that's what we're doing. We take very seriously our environmental safety and governance with third-party safety audits, et cetera. And our investment thesis is a fairly simple one. Gold, produced from experienced management in arguably the most mining-friendly jurisdiction in the world, and that's Nevada. Now, many mining projects, they try to get them into production and many fail. We have proven that we don't have one of those, that we have proven that we have a successful open pit heap leach situation at low cost. And that creates a large margin with our tight capital structure from which to pay a substantial dividend. And that's what we're doing. And everything in this industry revolves around grade. I've highlighted it throughout the presentation. I keep referencing the average grade, often 0.5% for some of these, 0.5 grams for some of these other mines around Nevada and the world for that matter. We're a unique situation where we're sitting on high grade, and that high grade allows these high margins. We couldn't do anything that we're doing under this strategy if we didn't have the property portfolio that we have that allows these high margins. Looking at our capital structure, we have one of the tightest capital structures for a producer. As I mentioned earlier, most explorers have hundreds of millions of shares. Many producers have 1 billion shares. We have 24 million shares outstanding. That's that leverage we provide. We have no warrants. We have no debt. We do have very minimal equipment financing. We have no hedging. As of the first quarter, we have 35 million in the bank. We added $7 million from operations from the prior quarter to reach that 35 million. A market cap at a $6 share price is around 143 million. We have good trade and liquidity for an early OTC stock. I expect that to increase over time as we get some institutions coming in. Our 52-week low and high is 75 cents. And this slide is not very old, but already we've gone over the $7 mark. At the time we ran this, our yield was 6%. So our strategy is a good one, and that already shareholders are coming in to Fortitude Gold to get the dividend and yield. And that is the differentiating factor. We did it at Gold Resource. We're doing it now here at Fortitude. And already we're seeing, shareholders come in because of the yield. We have a great yield still today, around $7. Management are some of the largest shareholders in the company. Then it's retail. And so obviously we want to keep courting retail and getting them in, and they will come chasing that dividend. But my next goal is to get institutions in. And I know a lot of these guys. I've been in, with Gold Resource for over 15 years. I'll be telling them the story, trying to get them interested, and I think they will be taking us to the next level. So with Gold Resource, we had a unique program where we minted our own gold and silver rounds. And in the dividend, you could have that converted into precious metals. I say there's a high likelihood we do that here at Fortitude. You can see the rounds we've already had minted. We haven't done a production run yet, but is what we use for our logo. I'm not going to go into all the meaning behind it. It has a lot of meaning to us. I designed it. But point being, it's a unique program. And it also speaks to what a unique industry we're in. I am fortunate to be in the gold industry, in which it's one of the few industries that what we produce and create will be around forever, and as a form of money and store of value. There's hundreds of fiat currencies that are in museums around the world. Someday the US dollar will also be in a museum, but I pretty much guarantee you that gold and silver will be around and you'll have purchasing power. And so it's great to be in this industry in which we're producing gold, and in this case, these rounds that are probably going to be around forever as a store of wealth and have value. I won't go into the slides on the appendix on exploration upside and what have you, unless we need to reference them on the Q&A. And with that, I'll conclude the presentation. We can open it up to any questions that may be in the queue. Matt, can you hear me? Okay, I see the question here. I'll respond to it. Matt, I don't hear you if you're talking. Robert Mullen, he said, the question is, understand the dividend will be a balance between excess cash flow and investment opportunities. What are ongoing maintenance CapEx needs for the company at this stage? And what would you need to see from price and or production volumes to raise the dividend? Great question. Great question, Robert. Okay, so CapEx, going forward, the near-term CapEx are an expansion to our heap leach. We found, since we broke ground, about 20,000 more ounces in the Isabella Pro deposit. So we needed to expand the heap leach, and that's what we've submitted our permits already. That expansion CapEx is about $3 million. We're also, I signed the contract for the power grid program, and we plan to be here a long time, especially this ADR facility where we truck carbon into this facility. So we want to hook to the power grid because we can save about $80,000 a month by our estimations hooking to the power grid. That project is about $1.5 million, has a 18-month payback, 16-month payback. And so those are the two big CapExes in front of us right now. Obviously, the CapEx, ongoing maintenance CapEx, so to speak, will change depending on what we're doing, what we're building. If we can move our projects forward to make a production decision, we're going to have CapEx builds, hopefully at Scarlet, hopefully at Golden Mile, and others. But those are the two big CapExes in front of us. And addressing your second part of your question as it relates to what has to happen to move the dial, I have many shareholders reach out to us and say, you could pay your high-end aggressive dividend right now with the cash you have in the bank, and they're 100% correct. We could. I don't want to because I want to make sure we have enough firepower to do our CapEx projects that I just mentioned. Plus, I expect to be building other mines. And so I want to walk that fine line where we deploy capital to the operation to grow organically, but also reward shareholders greatly. So it doesn't take the gold price movement. That's another layer. If the gold price takes off, sure, that could be another catalyst for the dividend increase. Again, I could
give me just a little flavor real quick, and if you will, and just talk to me about the transition from gold resource and to where you guys are now, and what was that transition? If you can give a little color on it. I know you can't give a ton of color, but you know, it was a great company and is a good company, and for what I'm worth, knowing you for years, I was very, very impressed with you in terms of your fortitude on being domestic. And so can you, like, you know, explain a little bit more on that? Because I think that's very important, actually.
Sure. Yeah, you can so kind of explain why the spinoff?
Yeah, start with the spinoff, but also being domestic here in the
Sure.
U.S.
Okay. Yeah, no, it's a good question. The spinoff happened primarily, it happened for numerous different reasons that built over time, but primarily because we, as Gold Resource, when I was with them, used to pay substantial dividends. And then the bear market tore down the market, tore everybody down, and we couldn't pay the big dividends again. But as things turned around, the operation has evolved into a really big mine. And so the CapEx projects year over year were about $10 million. So we saw the writing on the wall start to build over time that we were not going to be able to go back to paying substantial dividends. So we had some soul searching to do as on the board level. Do we walk away from, over half of our shareholder base who want or invested in us and demand the dividend? Do we walk away from them completely? Or because we created this Nevada mining unit, do we give them the best of both worlds? And do we allow and set free the Mexico operations with Gold Resource, from which to deploy more capital into the ground to be more efficient building itself, while spinning out Fortitude with a tight capital structure, with the margins that we thought we were going to make, and it turns out we are making, to then pay a dividend. And so we were delivering the best, I think, of both worlds. And so shareholders who wanted them both, get them both. They don't. But shareholders who call up and say, you guys should just stop paying the dividend, they're obviously happy with Gold Resource. And the shareholders who say, when are you going to increase your dividend, they're obviously happy with Fortitude. And some shareholders went one way, some shareholders went the other.
Of course.
But it was driven by the fact
Right.
that Gold Resource was actually founded on a company to pay a dividend. So we didn't want to walk away from the shareholder base. So we saw this opportunity to deliver both. There are many other factors in that decision. Isolating the Nevada mining unit just to Nevada also brings a premium in the marketplace. And you're seeing companies do that right and left now. What was it? I-80 spun out of Premier, and they created their own just Nevada. And it's been demonstrated over time that often in being in a good mining jurisdiction solely without the risk of other jurisdictions, you can have be rewarded in the marketplace as such. But there are many other reasons we did it, but those were the big driving factors. And so I thought I was going to be CEO of both when we started the spin out conversation. I thought, look, I'm now, why can't I do it? And we were well into the spinoff, getting really close to the finish line, deep in the weeds, when my SEC counsel, when my tax counsel brought up the fact that, yeah, legally you can be CEO of 100 different companies. But what you have to do, if you're going to do a tax-free spinoff, someday you're going to have to get in front of the IRS and explain to them why you're a 100% independent company. And I agree with their analysis. In no world was I going to be able to convince the IRS that if Bill Conrad was chairman of Gold Resource and I was president, and we're both president and chairman respectively at Fortitude, that I was ever going to explain to the IRS that we were an independent company. So it was difficult for us to leave. We were there for 15 years and all the success we'd had, but we saw the potential here to deliver for shareholders. And obviously we're still very bullish on Goro, and I think Gold Resource, the ticker symbol is Goro, and I think they'll do great things because, again, we've set them free to go deploy more capital into the ground. But now we are taking Fortitude forward, and we are already delivering in the fact we've spun out in January a low of 75 cents, and today we closed above 7. So the business strategy worked, and I think we're just getting started.
Couple of questions real quick for you. With Isabella Pearl on the acquisition,
right?
Where did that come from?
Okay, the Isabella Pearl, again, we built this Nevada mining unit under Gold Resource when we were all with them.
Okay, so it was spun out of that.
Yeah, and so the entire Nevada mining unit was spun out.
Okay.
But Isabella Pearl, during the last bear market, it was fresh in my mind from the prior bull market that we couldn't play in M&A. And that's when we watched all these companies do all this M&A for huge premiums because it was a bull market. The bear market hits, and that's the time to look. So that's when we went shopping, if you will. And that's when the team went up and down the Americas, all the way down to Chile Chico. I mean, we were all up and down the Americas, looking for specific boxes to check on areas. And we landed here in this particular area of the Walker Lane. So for like 4+ years, we searched and searched and searched during the bear market. Once we landed here, it was with a different property. I don't even think we own it anymore, but it got us boots on the ground in the area to where we heard about Isabella Pearl. And then we were able to acquire the Isabella Pearl. And then I closed 4 deals in 14 months during the bear market. And I knew my window was closing because the next gold bull market was coming. And sure enough, it's here. And it's very competitive now, very competitive. But I think because we picked this up during all these properties during the bear market, that we're sitting on the best properties in this area. If you're talking, I can't hear you.
Jason, it looks like we have a verbal question from James. I'm going to allow him to talk real fast. Looks like Matt is
Okay.
muted for a second.
Okay.
James, are you there?
Yes, can you hear me?
I can. James, how are you?
Doing fine. I have a question. It seems that the way you do things is on a small scale, but a very high grade scale. Do you have to go through all of the pre-feasibility studies, the feasibility studies, all of the permitting, and that takes so long and is so expensive to put a small operation into effect?
The short answer is yes. We do obviously all of what's required on the permitting front. You can never short circuit that. As far as the feasibility, we don't do it like the big guys. And sometimes we'll even, and we did this with Gold Resource, we'll actually put mines into production without even proven and probable reserves defended in front of the SEC. Not that we didn't think we had them. We did all the studies internally to convince ourselves, and then we move forward because we didn't need the SEC to tell us we have a mine. And so we may in the future put mines into production without a formal resource. More than likely, we're moving toward formal resources, for instance, on trying to get there on Golden Mile and hopefully Scarlet. But I guess to come back around to your question, yeah, we do most everything that other big companies do. But I think a lot of big companies, especially the very large companies, it could take them 10 years to get something in production, where we did this, 10 months from groundbreaking and 2 years from acquisition. So I think, again, we can run circles around the big guys. We acquired Isabella Pro in 2016. By 2018, we poured gold. So I think addressing your question, that we're very efficient. We don't continue to run fees, pre-fees. At some point you have to make the decision to move a project forward. And once it checks our certain boxes, we'll move it forward. Now, we're very specific. It has to check those boxes, but once it does, we'll move things forward quickly. I believe quicker, or as quick as anybody can.
But you still have to do a feasibility study to borrow money. Is that right?
If we were borrowing money, yes, but we don't borrow money.
So
I've never had any debt. For 15 years at Gold Resource, never took on debt.
Okay.
And I don't want to say never going forward, but I can't foresee a situation where we'd want to take on debt. This industry is so hard. It's so difficult. You plan logic.
What's your cash right now?
What's that?
What's your cash right now?
Right now it's 34 million and growing.
Okay.
So, we looked at debt. We always turn it down. There's too many things that can go wrong and do go wrong in this industry. You don't want to have somebody else come take your property, or you don't want to have to make decisions based on bad debt you took on. And we see that over and over again in this industry, where debt is taken on under a rosy scenario and everything turns south, and all of a sudden management are making decisions not in the best interest of the shareholder. They're making the decisions based on trying to keep the company alive, which I guess is in the best interest of the shareholder, but they're blowing up perhaps their capital structure, rolling over that debt. So you're right. If we took on debt, we'd have to have that. But I want to try to grow organically. I grew for 8.5 years with Gold Resource organically, never raised a dime. So, I want to try to do that here. And hopefully we can do a similar thing. But you're right. If we were going to go after bank financing, yeah, we would have to have all those box checkers.
Thank you. Excellent presentation.
Thank you. Great question.
So another question from Rob Mullen, who you may know or may not, but any non-core in your property package, are you considering selling, given how many competitive things currently, or less interesting, urgent to you, or then perhaps someone else? I don't know if you see that question, but if
No, I
you do,
I haven't had that question. It's a good question. The answer is no. I don't hang on to properties just to hang on to properties.
okay,
We used to have a property called Gold Mesa, and it didn't, it had some gold at surface. It checked a lot of the boxes, but we drilled it and it didn't meet our criteria, and we walked and got rid of the
that
property.
was it. That was it.
Yeah. So I don't hang on to properties unless I think they have strong potential to be deposits and projects someday. Every one of our properties has that potential. And I don't want to say I would never sell any of these properties, because I guess for the right price, everything's for sale. But I've been courted for one of our properties, which, out of discretion, I won't mention what property or who courted me. And I turned it down because, A, it wasn't enough, and B, they're trying to get a sweet deal because they think something's there and I think something's there and I own it and I don't have to sell it. So it happens, but the property portfolio that we have now, we worked really, really hard to get. And I feel very fortunate that we got it at the time that we got it. And I don't intend to sell any of them at this point. Good question, though.
Okay. Let's see. Do we have any more here? Getting close to the conclusion. See if there's any more. I've got one, actually. So again, on cash, what do you have on cash?
35 million as of the end of Q1, which was
And
up.
where did you raise that?
We didn't raise it. When the spinoff happened, spinoffs are kind of unique. The moment the board decided to move forward with the spinoff, which was
Okay.
3/4 of 2020, from that point forward, both operations financially separate. And so Fortitude was adding to its balance, cash balance, from that point forward. And so when the spinoff happened, it was also in the agreement, in the separation agreement, because in spinoffs, you can't spin out a company to fail. So you have to you do everything possible and every effort possible to make sure it succeeds. And so seed capital of 10 million also came over with Fortitude. So between the that 10 million seed capital for the spinoff to help us satiate that requirement of a spinoff, plus the cash balance growing from operations in Nevada, we spun off with our cash, and then since then have added to it. And again, we added 7 million cash in Q1 alone from operations. So, and we've added since then. So, I expect to continue this trend. That's the goal, right? And then we can do both.
For sure. And it's one of the things that, I've known you for, I don't know, probably 15 years now. And, going to conferences and that kind of stuff. I think you're an amazing player in the space that is domestic, which I actually respect heavily. And I think it's great.
Well, thank
I
you.
think you're doing a great job. And
Well,
I think the company is a great company. Meaning that I think more importantly, you as an operator in managing a company is really, really solid. And one of the guys that, you know, in me being in this business that I've met that is really, really good and really solid, you know, with you, and psyched that you're my friend. But even beyond that, it's a great story and a great guy and a great person. And that's how, you know, you meet people and market these things. And Jason Reed is one of those people. So,
Well, I appreciate the time and the opportunity to present your conference, and thanks for the compliments. I appreciate it. And
yeah. And, you know, for everyone, great story. And I will connect you guys with Jason moving forward. But at the end of the day, thank you for spending time today, and great presentation, bud.
well, thank you. And again, thanks everybody for taking the time to listen to our story. I think it's unique in the space for the aforementioned reasons. And again, I really do believe we're just getting started. And, you know, hopefully maybe next time around, we're $14 instead of $7. Who knows, right? So anyway, thank you everybody. And Matt,
All
thanks.
right. Thanks, Jace.
Have a good day.
Okay.